My question to you is this. That primal scream that you saw in May, does that really mean storage is so full in Cushing, Oklahoma?
Good to be with you, Manus. I don't think so. That means that there were a lot of longs just before the expiry of the May contract. I think it was mostly that. It's partly inability to store, but really it was the size of the longs. There was a squeeze of the longs, and as crazy and violent as it was, I think the bigger risk really to the industry is the direction of physical crude prices. As you and I talked after the OPEC Plus meeting in early March, and it's basically straight down and headed down, and it's headed away from the floor that President Trump predicted on April 9th when he said he thought that at around $22, $25, that was it. Crude was going to go up. And so I think, no question storage is vanishing. At this rate, end of May, Cushing should be full. But in terms of what happened in these astonishing last, 24 hours, I think it has to do more with a very poorly positioned investor base ahead of the May contract expiry.
Bob, so what can we see from the U.S. administration then in terms of a potential plan B? Because clearly their plan A collapsed together with the oil price.
Right. Plan A was to break up the fight, stop the fight between Saudi Arabia and Russia. I think it's going to become clear that's not going to work in the terms of putting a floor under crude prices and therefore capping the pain in the shale sector. So I think the president has been pretty credible and pretty clear in telegraphing that tariffs are his plan B. And if now we're soon going to be into the June contract, if prompt prices fall below 20 and start heading down towards $10 a barrel, as storage increases, I think the administration will be looking at tariffs. Right now, the president at his news conference a few hours ago just said, look, we're going to fill up the SPR, and I'm going to take a look at this Saudi flotilla that's coming in. He just said he just learned about that. But I think tariffs are probably next up.
So, I mean, that is, he is famed, of course, for being tariff man. Goldman Sachs talk about a violent rebalancing on the market, Bob. They say it'll come in a matter of weeks, not months. And that violent repricing in America is about closing down production, isn't it? 30% of the drillers are offline. Do you expect a more aggressive shutdown in the drillers in the U.S.?
I think that's right. I think the next few weeks, several weeks to maybe month or two, are going to be a violent bottom as storage and Cushing in the U.S. more or less tops out. Prompt prices fall, accelerate further, and force more shut-ins of production. Now, it's not the only place. The United States is not the only place. I think Russia is going to be complying well, partly because it has no choice but to shut in a lot of its production. I think you'll see maybe some accelerated production declines in Saudi Arabia. I think Saudi Arabia is a little concerned about the optics of a flotilla of crude that was loaded this month and will be showing up in the next 4 to 6 weeks, just as prices are hitting their bottom in the United States and storage is filling. So I think everybody's going to start accelerating production cuts, whether it's voluntary, involuntary, and the next few weeks to months will be the violent bottom. That's assuming, God willing, that this virus is behind us and we're able to crawl out later this year in terms of demand.
Another red headline crossing the Bloomberg. Just hold that thought, Bob, coming from Indonesia. Again, earlier we heard from other countries, including Hong Kong, in terms of territories, about what they're looking to do in terms of potential extensions when it comes to these restrictions. So now Indonesia is banning mass travel for Eid al-Fitr, which is, of course, happening in the coming weeks. So that's going to be banned this week, the mass travel. We had Hong Kong just a couple of hours ago extending their measures by 14 days in terms of the social distancing. We keep a close eye on these developments, but I want to circle back to the oil story and the 51,000 jobs that are being lost as we speak because of the damage that's being done to the crude oil markets. Bob, I mean, let's assume that a lot of these shut-ins do take place and this contraction gets executed at an aggressive pace. Is there a possibility that the pendulum could swing to the other side, where in a case of a rebound in the global economy, we're suddenly in a supply deficit situation?
No question, I think that's going to happen. Boom is going to follow bust. We are going to eventually get out of this. It may take a while before we're flying and traveling at the rates we were beforehand. But I think the destruction of investment, which was already down 40% from recent years, I think we were going to get tight in terms of upstream investment in oil even before the coronavirus. But assuming a fairly decent move out here, I think we're going to destroy a lot of supply, tighten the market, and then boom, even bigger than we would have before the coronavirus. You know, one thing that's key here is when you have to abruptly and quickly shut in production, you can do that in a way which is damaging to the reservoir, and it makes it difficult to bring that field back on. Also, above-ground political conditions can change. So the demand we're losing, I'm pretty sure, is going to come back. It may come back longer. It may come back differently. But that demand, people love to travel, and we love to consume stuff that requires transportation. That hasn't changed. But the supply we're going to lose, that worries me, and I think we are going to tighten this market, and boom will follow bust.
There's a consequence, that tightening of supply and that close-in, isn't there, Bob, in terms of default and financial risk?
I didn't quite hear just the last part of what you said. Sorry.
There's a default risk here. There's a primary debt default risk now associated in that geography. Can you quantify that? Can you put that in a political context for us?
Well, I think there's no question that dozens of shale oil companies, producers, medium, smaller size, are at risk of bankruptcy here. If we go into the teens, much lower, and this lasts through the summer. And I'm not sure that any of the financial aid that's going to be provided by the Trump administration is really going to help much to forestall that. So there's going to be consolidation, there will be bankruptcy, and there will be pain. But that is sort of transient. The molecules will still be there, different owners, different operators, but the resources are there. I think what has really angered the oil states, your Texas, your North Dakota senators, is the job loss and the shutting in of production and the knock to U.S. energy, growth and so forth. And I think this is really what's gotten them angry. It's the job loss, it's the budget revenues in the states, it's the political problem of having this great new champion. They're so proud, especially the Republicans, the President administration, about having just become the world's largest oil exporter, just become a net exporter, and then now to have this happen is just a real setback that I think almost transcends the bankruptcies and so forth in a way politically.